Hey everybody, I'm here with Hailey Modin again for our Lender Lowdown in this month's newsletter. So we're just going to ask Hailey a couple questions. We want to keep it kind of short and sweet. Hailey, what is going on in the market and what do we need to know as far as the mortgage world goes?
Yeah, good thing. So overall, we're in the spring market in Spokane area. We see lots more houses hitting the market, a lot more
Yes.
buyers buying houses. So that has been super exciting, a lot more activity than we were seeing this winter. So
Yeah.
we're anticipating spring market will lead into our summer market, especially kind of as we're seeing the end of the school year coming on and stuff. That's a
Mm-hmm.
pretty common time for a lot of buyers to start buying.
Yeah, I've been telling everybody lately. I'm like, the spring market is spring marketing. Like it is, it's going. It's pretty wild to watch actually, but it's good.
It is, yes. And certain areas of town, like the South Hill and North Side, like first-time home buyers, definitely
Yes.
multiple offer situations for a lot of homes that have hit the market. So we're seeing that too.
Yeah, just to speak on that a little bit more, I think that the market trending kind of upwards again and all of the statistics that we're watching, just a note to those that were sitting on the sidelines, and I understand that everybody like has their time, right? But I think also a lot of times people get past a couple learning lessons and then they're like, oh, if I had only. And so I think that the trend upwards is really an opportunity for those that would like to take it to jump on if you can, right?
Oh, absolutely. Yes. I've definitely had more buyers be like, okay, I want this house. What do we got to
Mm-hmm.
do to get it? And
Yes.
they're willing to like, maybe go a little over asking or, offer different things to the seller, like a faster closing timeline.
Sure.
That's a more enticing offer for the
Make it
seller.
happen.
And they're pretty excited about that. So
Yeah.
yes, buyers are definitely getting to be a little bit more aggressive, I would say, with their
Yeah.
offers, which
Agreed.
is exciting because then we're seeing more of them be accepted.
With the interest rates, because they're still, didn't they kind of tick up again or did have they come back down?
Yeah, yeah. Since the first week of April, they've definitely ticked up a little closer to 7.5 than we were to
Yeah,
7.
okay.
Um, but we do see that basically if the numbers make sense on a monthly payment basis,
Sure.
the buyers are still going for it. So
Yes.
maybe instead
Okay.
of that 450 house, they're looking at a 400 and they're making that compromise to make it a comfortable payment for them. And so, yeah, that's what I've seen. Yes, interest rates have definitely gone up, but we're also seeing buyers are still finding a payment that's comfortable for them.
Sure. That's awesome. Do you see that? Do you think that just from what you're seeing, you talked about first time home buyers, are you seeing a lot of that in the market? Or are you seeing a lot of like second, like repeat buyers, moving up buyers? What are you
Yeah, right now in my pipeline, I'm almost 50-50 first time home buyers and move up
really?
buyers. And then move up buyers, I was just talking with a lady yesterday and she's like, I have 4.25% interest rate on her home in
Wow.
Denver. And she's selling that home in Denver and moving to Spokane to be closer to family.
Got
And
it.
she's like, it does hurt a little bit to get rid of that, but
Sure.
now she has, $210,000 to put into this new home purchase. So her payment, yes, it'll be a
Yes.
little bit higher. It's just easier because she has a lot of equity to roll over.
Yeah.
And so it's actually not as much of a payment shock as she even thought it might be.
Sure.
So that's pretty exciting too.
Yeah, I think that too. Just like once you get into that first initial home, which isn't going to check all the boxes, but I think if it checks enough to sit on it for a couple years and make it your own, then the equity is going to help you so much in a position later when you are ready to move up, regardless of the interest rate. But if you have no equity at all to play with, then you're in
Yes.
like a worse position.
Right.
So,
Oh, that is so true. It is so true. And the other thing I've seen first time homebuyers, most of my strongest first time homebuyer clients have minimal amount of debt. So
nice.
either a small car loan or no car loan at all.
Mhm.
They have kept their credit card balances under control, kind of those different things where they're able to feel a little more comfortable with like a $2,000 a month payment than they
Yes.
would have otherwise if they had other debts that they're paying on.
Yeah, that's smart. Huh,
Sure.
that's interesting. I feel like all of the reports tell us that so many Americans are like so in debt, right? And the debt to income ratio is so awful. But you're seeing, well, for the ones that are playing it correctly, right? Like they probably had intentions to want to get into the market. And so they were listening to people like you, and this is how you do prepare yourself. And again, I think that's always so important to know is like, don't be afraid to talk to the people that you know you need to talk to if your plan is to buy a home someday, because it might not be today or tomorrow, but it could be 6 months or a year from now if you do what needs to be done.
Oh, 100%. And I'm all about putting those plans together like we talked about on the last call. Like I love helping coach people around that. And then also kind of just stepping even further back from just getting a mortgage is how does, a debt payment plan and a future plan affect your net worth as a whole? Like as an individual, like homeowners, we know have a higher net worth. So it's huge, right? Like we're setting you up for success. It's not like I need to pay off this credit card so I can buy a house. Like, it'll probably help you, but it's even bigger than that. Like credit, like responsible credit management is what we call it, that's huge for like lifelong success as a financial, health for yourself.
Sure. So in summary, when it comes to the market right now, the spring market is popping.
It is.
Manage your finances well. Don't have a ton of debt. And we can still make things happen even with the high interest rates.
For sure. And we are seeing kind of market-wide, we have a Fed meeting tomorrow, so that'll be interesting and potentially shifting market interest rates. What the Federal Reserve says about their rates will impact mortgage rates, of course.
Sure.
Overall, inflation is still high, and a lot of assumptions are that the economy is really strong, but a lot of economists are saying that's kind of smoke and mirrors. So that's more, delayed reports coming out that are saying, economy's strong, but then we're seeing consumer debt is just through the roof right now. And even delinquencies on smaller debts like credit cards have gone up significantly. And so that's kind of just telltale that maybe the economy's not quite as strong as the reports are saying they are. So I'm really curious what the Fed will say tomorrow. So that will be May 1st meeting.
Okay. We'll come out with more information. Outside of that, Hailey, what in your world is something that you would like to share as far as just something that you're using to help people get into the market or do what they're looking to do?
Yes. Kind of just jumping back to that spring summer market that we're in, writing the strongest, most competitive offers for buyers is top priority to get the house that the buyer falls in love with. And so one way that we're doing that is removing a home sale contingency with something called a bridge loan and a backup offer. So our company has this program where if you are selling a home or you need to sell a home to get the equity out of it in order to qualify to purchase a new home, we can do this two-part program. You get a bridge loan, so you tap into the equity of your current home before it's even sold, and you roll that into your new home purchase. And then we do what's called a backup offer. So you have a certain number of days to sell that old home after you've purchased the new home. And then if it doesn't sell in that timeline, we'll buy it from you. And so that's really nice because we can also remove that mortgage for your current home from your debt to income ratio and your liabilities in order to qualify you for the new home. So that's a buy before you sell program, not something most lenders are offering, which is super cool. And it's very favorable in terms of cost, 0% interest rate on that bridge loan.
So crazy.
Bridge loan payment, all the things, right? So pretty exciting. And it's helped buyers write super competitive offers because they don't have any home sale contingency.
Yes, that's definitely the biggest thing that I, as a realtor, am hearing in the market is that so many people have contingencies. And I will say that the market is strong, but it's strong if you are pricing your home competitively. For the people that still want to kind of live in the COVID mindset where, yes, we are getting multiple offers, but they're not like 50 and 100,000 over. So that being said, just being as strong as you possibly can be. But it sounds like I've heard that most bridge loans are kind of complex, but yours sounds it's cleaner than, I don't know, the average program out there, would you say?
Absolutely. Super streamlined. And we can do it right alongside your pre-approval. So if you know, like, hey, I know I'm going to have a contingency, let's set this up so that you're ready to roll, as soon as you do find a place. But if you end up not needing it, maybe your current home sells faster, there's no penalty for backing out of that program.
Nice.
So that's really nice too. So it can just be a backup option too, but it is very clean and streamlined. And it's not like a HELOC. So a home equity line of credit would be another way to tap into your equity, your current home. That can be a good program, maybe if you're months out from being ready to buy. But it does mean you're applying for a new loan. You're going to have a payment on that loan, and there'll be other kind of strings attached, so to speak. Whereas this one's faster and shorter term.
Right, because with the HELOC, you have to qualify for the payment now on your HELOC, right, that has a higher interest rate, and then the home that you were going to.
Yes, so there is that option. We actually have, separate from our bridge loan option, we have a new program, second program, that will actually allow us to exclude a HELOC payment as well as your current mortgage payment with that backup offer component of it. So we do have an option.
So see, Hailey has all the answers. She could make something happen.
We can make it happen. It's so cool. So yes, Emily, you were right though. Usually you do have to count the payment, but we do have a program to exclude it if we need to.
Cool. Yes. So lots of different ways that you can do it.
So good.
Moral of the story is typically we can make something happen. If you want it bad enough, we can help.
You just start the conversation. It's free to talk to us.
Yes. Okay. That being said, Hailey, how can they reach out to you if they just like what's the best way to get a hold of you?
Yes, of course. Emily has all my contact, of course, but I would say phone call is my favorite. We can talk quite a bit in 5 to 15 minutes.
Sure.
And we can always take longer if you need it, right? And then that. Do you want me to tell me phone number or
Sure,
email?
give me your phone number. And then I'll link her just your website as well so they can find it.
Oh, perfect. Yes. Website, you can click contact, all that good things. So phone number 509-606-1686. And you can text or call on that line.
Yeah. And we're happy to have a conversation.
So good. So good.
Okay, well, thank you so much, Hailey, and we'll talk on the next one.
Okay, perfect. Bye.